everyone, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Tuesday morning and the cues coming out of global markets are fairly supportive, and the GIFT Nifty, of course, is hinting at a start above that 19,450 mark. So we will have to see whether or not, we kind of manage to regain momentum in today's session. Of course, over the next 30 minutes, we'll be talking about cues to trade. We'll also be getting you a big market voice on the kind of stock selection strategies you should be adopting at record levels, and all the stocks in news, including SBI, CarTrade, and Nazara Technologies. So, but of course, we'll also be getting all your stock-related queries answered by our technical expert on the show. So if you have any queries, as usual, send them in to us on our YouTube feed and we will have them addressed. But before we do all that, as usual, let's take a look at the top stories at this hour. Wall Street kickstarts the week on a winning note. Key indices snap a three-day losing streak ahead of the all-important June inflation report that is due on Wednesday. Asian markets trade largely higher, tracking a positive handover from Wall Street. The GIFT Nifty, as I mentioned, is indicating a higher start for the Indian market. Oil prices dipped by about 1% to $78 a barrel on the likelihood of further Fed rate hikes. Gold remains steady as traders await US inflation data. Foxconn decides not to proceed with its over $19 billion semiconductor partnership with Vedanta. In fact, the metal giant says it is fully committed to the semiconductor project and has lined up other partners without disclosing any names. And the other stocks in the spotlight today are SBI Card, CarTrade, Nazara Technology, and a whole lot of other stocks that we will be discussing over the next 30 minutes. Well, we are joined by Sacchitanand Uttekar of TradeBulls Securities to talk about the technical setup, all the stocks that are making news, and of course to also get your stock-related queries addressed. Good morning, Sacchitanand. Good to have you on the show. Yesterday, we gave up most of the gains towards the end of the session, but it was Reliance that was holding the index steady, even though it gave up most of its gains. Firstly, what is your view on the Nifty? Would you expect it to take support somewhere around the 19,300 level? And secondly, would you expect levels of 3,000 on Reliance Industries anytime soon?
Good morning, Nandita, and thank you for having me on the show. Clearly, I think the stance on the Nifty remains positive because it is 9 trading sessions. It has been trending above its 5-day exponential moving average, and so far we have really not seen any deterioration in momentum. Even if you look at the options data, the cluster is clearly indicating that 19,200, the put writers are still confident. But on the higher side, we are seeing some minor bouts at around 19,500, 550 kind of a zone. And once this particular zone gets cleared off, we may see Nifty, scaling towards 19,700 within this particular week itself. So as of now, I think, after a run-up of almost 5 trading sessions from the base at around 18,640 towards 19,400, for the last 4 trading sessions, Nifty is just consolidating. And I think the entire structure is still in a healthy higher top, higher bottom sequence. So until unless we don't see a closing below 19,220 from here on, the bias for the market remains positive. Yes, we are in a consolidative mode. Even yesterday, we saw an inside bar formation on the Nifty spot. The immediate range for today's session is holding at around 19,440 on the higher side. Once this particular level is breached, we may see Nifty, scaling towards 19,560 immediately. On the lower side, I think 19,300 should act as a support throughout the day. But I think the major support that you need to note down is around 19,220. So until unless we see Nifty, consolidating and holding itself above this particular level, the probability of a breakout, still remains open. And we are expecting that this particular rally should continue eventually towards 19,700.
All right, that's the kind of levels that we'll be watching out for on the Nifty. Hold that thought, Sacchitanand. We'll come back to you and discuss specific stocks. But let me also get on board our next guest for today, Trideep Bhattacharya, who's the CIO-Equities at Edelweiss AMC, is joining in this morning. Good morning, Trideep. Good to have you on the show. Well, good morning. With market scaling new highs amid strong FII flows and of course strong domestic data, would you say that this is just the beginning of a bull run and 20,000 is like just about a couple of months away on the index?
Well, I think we are clearly in a medium-term uptrend, and from a near-term perspective, forecasting anything would be a bit of a guess. But I suppose where we are heading it into a bit of into the result season, where the prima facie data coming out of whether it's loan growth numbers from banks and also what we have heard so far points to reasonably fundamental, strong bottom-up fundamentals. We will obviously hear more as the companies speak in the course of the month, but I think in the face of macro weakness, the relative earnings resilience of Indian markets is worth noting, and which is what is being sort of, celebrated as the relative strength of Indian equity markets near term, and will be there over the medium term.
All right, Trideep, yesterday we had the AMFI data. Of course, small cap funds have seen record inflows, in comparison to large cap funds, which have in fact seen outflows. So would you say that, small and mid caps, that end of the markets is getting a little heated? Would you be a little uncomfortable with the valuations there right now?
So I would say that first, this is symptomatic of the risk appetite in the markets. And as I said, the relative earnings resilience is being celebrated by the markets by higher interest in mid and small caps. That's the first point to note. And whenever the flows come, it creates some sort of excesses at some point. I think while we are in the medium term bull market and things remain particularly positive, in pockets, valuations are getting on the higher side. But there are still many pockets of value which remain in the markets and worth playing around. So I wouldn't try to sort of hazard a big caution on mid and small caps. But yes, in some pockets, some of the stock price movements have been a little more exuberant than expected.
All right, you spoke about pockets of value. Among consumption, defense, IT. What would you, say that is emerging as a pocket of value now?
See, of the three that you mentioned, I would probably point towards IT. But having said that, let me also caution your viewers that the demand momentum in the very near term, which is maybe the June quarter numbers or September quarter numbers, might remain a little tepid. And for a better part of FY24, which is the current fiscal year, might remain a little sluggish. So I think if investors are willing to look through the near-term weakness and are willing to play for the long haul, then certainly of the three that you mentioned, IT appears on a relative basis more value. From a long-term standpoint, I would be particularly bullish on defense. I think overall, we think this is a 10-year opportunity where the demand far outstrips supply. And this will probably become a big sector from an Indian market standpoint. But clearly valuations are higher than higher in the near term. It's more growth area rather than value. That's how I would qualify.
All right, so that's an interesting view coming in on IT, given the fact that the street is divided. Some say avoid it completely, some say it is the time to buy or wait for further downside to buy into it, given the fact that the next couple of quarters may be a little painful for some of the IT giants. But moving forward, you spoke about defense sector. We have always spoken about the likes of HAL, BEL and the likes. But what about the shipbuilding companies like Mazagon Dock and Cochin Shipyard, SCI, these kind of companies? Would you have any kind of exposure to these companies?
So while I can't get stock specific here, I can tell you that, as I said, as a starting comment, that the opportunity is so big and supply so limited. Supply, i.e. the companies that can fulfill the demand which is being asked for by the government of India in the form of indigenization of defense, that you will see multiple types of companies entering into this area, them picking their areas of expertise and trying to get as much mileage as possible. So I think that's what I meant when I said that you will see expansion of companies getting into defense, and I mean, if the recent data points are anything to show by, this is just about the start. You would see this trend intensify, particularly after we see through the elections and the macro is kind of, the political macro is a little more stable in India after that.
All right, last couple of questions to you, Trideep. Could you share what kind of a stock selection strategy one should look at these record levels? And secondly, what kind of an asset allocation would you recommend at when markets are at record high?
Great question. So I think First, this record high point, I would like to clarify a little bit that yes, clearly markets are at record high. But if you look at about 1 year and a few months ago, you would see the markets were at same levels. So broadly speaking, the markets haven't gone anywhere is another way to look at it for the good 12 to 15 months. Even during this 12 to 15 months, however, the earnings estimates of companies have ticked up by at least about 15 to 30% depending on the growth rates of the companies. So the valuations today are a lot more palatable than about a year or so ago. But clearly we have seen a bit of buoyancy in the market. So on the back of buoyant market, how do we pick stocks? So our stock selection framework revolves around basically earnings resilience. So we always, what we try to do is we look for pockets of earnings resilience where we see earnings visibility or earnings growth visibility or earnings revisions likely to be ticked up. That's the place to be, particularly when markets are looking robust, because on a relative basis as well as on absolute basis, these are the pockets I would reckon where valuations would hold up in case the markets fall, or do well even if the markets rise.
All right, that's the word coming in from Trideep. With that, Trideep, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. It was a pleasure talking to you.
Thanks for having me on the show.
Thank you. Well, let's go back to Sacchitanand then and talk about specific stocks. I want to talk about Vedanta. Of course, Foxconn has pulled out of that $19.5 billion JV of semiconductor chips, and because of that, of course, that was something that was highly anticipated when it comes to Vedanta. If you look at the stock price, it has kind of picked up over the last 1 month. But if you look at it from a 6-month perspective, it has lost quite a bit of a ground. But would you say that this bit of news would come as a dampener? But even though the company has maintained that it is looking at other partners to set up this chip factory that India was so keenly watching out for.
Nandita, I think the stock has been consolidating within a particular range for the last 5 months now. And if you look at the overall resistance, it has never sustained above that 290, 295 zone. And on the lower side, the support base is very much clear at around 265. So I think the stock is still finding reasons for a specific breakout on the either side, and probably this particular news trigger may help the stock come out of the particular range. When it comes to performance, I think clearly the stock has been underperforming as compared to its peers, and one needs to be very careful while building any aggressive longs here. So unless we don't see a very concrete breakout above that 290 mark, where its 200-day exponential moving average is also placed, one should not chase any aggressive long positions here. And on the contrary, in case the level of around 260 or 275 is breached in today's session, then probably we may see a trading swing towards 260.
All right, those are the levels to watch out for on Vedanta. Let's talk about CarTrade then, recent listings. It's in news given the fact that it will be acquiring OLX India's auto business for somewhere around 537 crore rupees or thereabouts. We've seen some of the new age companies, pick up quite a bit after the kind of grubbing they saw last year. But CarTrade seems to have not really done all that well compared to the other, new tech companies. Over the last 1 year, it's down somewhere around 28% or thereabouts, and it's just coming off its 52-week lows. Would you suggest looking at other new age tech companies, or would you say that CarTrade warrants a buy at lower levels?
Well, CarTrade still continues to be in a lower top, low bottom sequence. So there's no second thought about, buying this particular counter. Yes, we have seen a, recovery from the base at around 360 right now, but the entire structure has been weak. So probably, this could be one of the pullbacks. And if you look at last few trading weeks, the stock has been, failing to sustain above its 200-day exponential moving average as well. So definitely, one should avoid, creating any fresh long positions here. On the contrary, I think a stock like Paytm has really displayed a good, strong rally. And I think this particular stock is now, getting back into a corrective mode. So on a decline somewhere close to around 780, 800, I think that will be a good level wherein a stock like Paytm can be considered. The stop loss should be placed on a weekly closing basis below 755. And we see this particular stock, scaling eventually towards 1100 levels. So positionally, I think, the structure has changed. Momentum was seen in the last month itself. And right now, it's a very good pullback, giving us a good opportunity to re-enter the stock.
All right. Paytm preferred over CarTrade then. Let's talk about SBI Card. This stock has been in a downtrend and over the last 1 month has lost somewhere around 10% or thereabouts. There's some news flow around this company. You know, there's been a change of management. In fact, Rama Mohan Rao has resigned as the MD and CEO with effect from the 11th of August. And we have Abhijit Chakravarti who will be taking over from the 12th of August. As I was mentioning, the stock has been in a downtrend. Somewhere around 835 zone, but do you expect it to make some bit of a recovery going forward, somewhere around 900 levels or thereabouts?
Yes, Nita, I think the overall structure for this particular stock is very healthy. We don't have any second thoughts about it, and we have been recommending this particular stock from a long-term perspective. Overall, we are expecting the stock to scale towards 1200 plus kind of levels. So even right now, the kind of recovery that we saw in last 2 quarters, that particular movement is reconfirming the base at around 750. We have already seen a very strong rally, since the month of April, and right now for the last 3 weeks, we have seen a meaningful correction within this particular rally. Even right now, if you look at the price formation yesterday, we saw a bullish hammer getting reinstated around its 200-day exponential moving average, which is placed somewhere close to around 830. So all these signs are good and healthy for this overall development of the bullish trend. So sooner or later, we may see this particular stock, scaling towards 960, and that's why we continue, recommending this particular stock from a long bias. The stop loss should be placed at around 740 from here on, and it can be accumulated in one's portfolio.
All right, that's a bullish view coming in on SBI Card. Before I take up our investor queries, I want to talk about Nazara Tech. This stock has clocked in smart gains. In fact, over the last 1 month, I think it is up in double digits or thereabouts. Now, there is news flow that the company's board has approved fundraise up to 750 crore rupees via equity issue. It could be rights or preference issue. So, this stock, of course, will be in focus given the fact that the GST Council is also meeting today and we'll be discussing taxation on online gaming as well. So, Nazara Tech, 730 or thereabouts, inching towards 52-week highs. Would you expect levels of 800? Would you expect or would you advise investors to look at this one?
Well, immediately the price action is a bit concerning, but from a trend perspective, yes, we have seen the stock scaling towards 720, 740 kind of a zone. The immediate hurdle for this particular stock is somewhere close to around 770, where its 200 weekly exponential moving average is placed. And once this particular level is breached on a weekly closing basis, then probably we may see a bigger pattern getting unlocked here. There's almost 2 years rounding bottom formation which will get activated, but a closing is something that one should wait for. In case if someone is already riding on this particular counter, then the trailing stop loss for this trade should be placed somewhere close to around 685 on a weekly closing basis. And the structure, once a breakout is in place, one can add on some aggressive positions. But as of now, I think it's better to hold on to your existing positions and wait for a breakout to conclude.
All right, that's the view on Nazara. Then let's take up some viewer queries then. Manishankar M has sent in a query on Heritage Foods. Now, yesterday the stock was up and about, hit a 52-week high, up 4%. And in fact, over the last 1 month also up somewhere around 6%. 6 months, 25%. What's happening on the charts? Would you expect more further upside?
It's better to keep a trailing stop loss strategy. The stock is holding well above its 5-week exponential moving average, currently, which is placed somewhere close to around 215. So unless we don't see a closing below 210, one can retain the positive stance on this particular counter. From a pattern perspective, it looks like a bullish flag formation. Once the breakout is established about 230, we may see this particular stock scaling towards 265 soon. So one can hold on to their existing longs with a stop loss at around 210.
All right, keep a stop loss of the level that was mentioned by Sacchitanand. Let's talk about some of the specialty chemical names then. We have a query from Arun Srinivas and wants to know whether one should enter into a Deepak Nitrite or Balaji Amines at the current juncture? Specialty chemical stocks have come off quite a bit. Even earnings weren't all that good. And yesterday we saw Deepak Nitrite plunge somewhere around 4% or thereabouts. Would you advise investors to, look at some of these specialty chemical names now, given the fact that, China plus one still remains a theme? Going forward, it may emerge given the fact that there is a considerable amount of slowdown in China and it hasn't really picked up the way, the world had really anticipated.
Well, yes, in fact, most of the counters have displayed a good sizable, price up move, and post that, almost all the stocks are down by around 30% or so from their all-time high. So time and price, both, corrections are almost done, and probably, any declines going forward would be a good opportunity to accumulate these counters. From a trading perspective, I think Deepak Nitrite still holds as a favorite. On the lower side, it has a good strong support somewhere close to around 1940, 1900 zone. So in case, those dips are seen in this particular trading session itself, one can, consider building long positions here. The stop loss should be placed somewhere close to around 1860. And on the higher side, the stock may again start its, up move about 2140 kind of a zone. So I think Deepak Nitrite can be considered on a decline.
All right, consider Deepak Nitrite on decline. Hope that answers your query. Let's also take up a query on IEX. This one is coming in from Jitendra Verma. Stock hasn't done much over the last 1 month. It has just been sideways. Would you advise somebody to look at an IEX right now?
No, Nandita, I think the trend is still weak. Every time it, tries to, clear that particular zone of around 150, 155, it is faced with more selling pressure. So clearly, from a weekly, monthly perspective, there is not a major change in trend. Even on the daily scale, since we have already seen a significant drop from 150 zone towards 120, there could be a pullback, but I think that pullback would again be an opportunity to exit from this particular structure. So we don't see any major changes in the structure from a bullish perspective. We expect this particular weakness to continue towards 110.
All right, weakness to continue on IEX. Hope that answers your query. I want to again focus in on the defense space. This pocket has been in the news ever since, in fact, there have been quite a few deals that have been signed, when Prime Minister Modi was in the US. In fact, he'll be traveling to France as well, and we can expect a lot of more defense deals going forward. But, we have a couple of queries on our feed. Venkat Vijayaraj wants to know about Bharat Electronics and, but talking about Mazgaon Dock as well, we have a query coming in from Anil Dhasmana. Mazgaon Dock, of course, has been in an uptrend. Yesterday, it was up 9%. And BEL, I think, has been consolidating after the kind of up move it has seen over the last few months. How would you look at these two counters now?
I think both are in a very strong, healthy uptrend. If you look at BEL, I think the structure is getting more confident. We saw a breakout above 115 recently, and post that particular breakout, we saw an upsurge and a consolidation. So overall structure is still very healthy. We are expecting levels close to around 140, 155 going forward, and still we recommend building long positions here. The stop loss should be placed at around 110 on a weekly closing basis. When it comes to Mazgaon Dock, again here we have a series of continuation patterns. The trend looks very healthy. Even yesterday we saw a fresh breakout from a bullish pennant formation. The pattern target is placed somewhere close to around 1760 from here on. So any declines towards 1400 would again give an opportunity to build some trading longs. The stop loss from here on should be placed at around 1298. And on the higher side, the stock can be reviewed somewhere close to around 1700, 1760 mark.
All right, 1760 kind of levels to watch out for on Mazgaon Dock. Last query for the day. It's coming in from Rajiv Menon, wants to know your thoughts on Ujjivan Small Finance Bank. I think this stock has been in a fairly good uptrend, and in fact, rubbing shoulders with 52-week highs as well. How would you play this one on the charts?
I think most of the small and mid-cap banks are doing good, and even right now, if you look at the structure of Ujjivan Small Finance, there is no signs of any distortion here. even if you look at the daily RSI, there are no signs of any divergence. So I think probably the trend strength should sustain. And if you look at momentum, then probably the stock needs a breakout above 45 particular zone. Once that particular breakout is again established, we may see further momentum in this particular counter. So on an immediate basis, I think 45 remains an immediate target. And in case if someone is holding on to long positions, the advice would be to retain them with a stop loss at around 39.
All right, keep a stop loss of 39, 45 levels to watch out for on the higher side. With that, we've come to the end of the query segment. But Sacchitanand, what are you recommending for our viewers this morning?
Nandita, we are recommending a combination of long shorts. On the long side, clearly the trend strength in most of the metal counters is very robust. We saw a breakout from bullish pennant formation on JSW Steel. We are expecting a price target of around 820, and hence recommending building fresh further long positions with a stop loss at around 798. The second stock that we have recommended to our clients is Kotak Mahindra Bank. The stock is again, showing some signs of reversals. The base at around 1840 looks very confident. We've already seen a good elevation in yesterday's trading session. There's a piercing line formation on its daily scale, which is again a healthy sign of a reversal. We're expecting a move towards 1900 eventually, and hence even here we are advising building longs with a stop loss at around 1860. And the weak structure is on Jubilant Foods. Yesterday we saw it breaking down from that particular consolidation. The 480 level was significant. That particular level has been breached and a closing established. We have a negative crossover on its 5 and 20 exponential moving average, which is indicating further momentum on the lower side. We are expecting a move towards 460, and hence any pullbacks towards 478, 479 should be utilized to create fresh short positions with a stop loss at around 484.
All right, so those are the recommendations coming in from Sacchitanand this morning. With that, Sacchitanand, thanks a lot for taking out time as always and joining in and patiently answering our viewer queries as well. Well, with that, we've come to the end of this edition of Morning Trade. So from me and the entire team, thanks a lot for watching. But don't go anywhere, because coming up next is Opening Bell.